Hello and thank you. This is the 8th day of December 2019. Thank you for tuning in. My name is Derek. All bets trades of the like. And that's within each's own risk and their own reward. Taking a look at gold and silver. Risk reward on precious metals. Well, the risk if you own it is that maybe someone will steal it. Maybe the manipulation of these markets will continue in full throttle. And even on short-term levels, maybe you can just wait a few weeks, months, or years and get a better price. Of course, some of the rewards are much higher prices, and then the risks of not holding any. Well, the inflation on everyday items just keep on escalating. Anyway, let's get on with the gold chart, which had a lot of resistance earlier in the year, starting on August the 13th, but even really on the 12th, and that of $1,522. What does this represent? These numbers, well, too much data on the daily. Can't show it to you there, so let's go ahead and try it on the 3-day. Yeah, that'll work. This high, this low, this is 38.2% exponential Fibonacci retracement. This is in at 61.8. And amongst the 3-day term, uptrend, going sideways, the 18 average now starting to decline. Thus, the intent on this particular time frame to start a bear market. And on the weekly time frame, you can almost say the same thing here, if it is able to break down below this number. And if it does, I'm going to be looking for $1,321.07, probably piercing a little bit lower, to be that of an area of support. In the situation that's able to get above 1533, well, then that we'll be looking at some really interesting, good bullish behavior coming into play. Well, let's take a look and make sense of this on the shorter term. As the price did get above the 18 average of highs on the 3rd day and then paused for a couple and then giving it all back down the 18 average of lows and really in the area of the must hold for where we would be. And by the way, that was my phone if you heard a text message thing. I hope you didn't hear it because it's 3 feet away, the phone. Anyway, the price action at the 18 average of lows, and if it doesn't hold here, yeah, we're going to be looking at lower prices. It's a must hold for, of course, the rally that came in on December 3rd. Single hour term, and we can even see on this not a surprise. I mean, it got above and hit this previous level of resistance on a bullish level, highs not seen in well over a dozen and a half for 2 periods, and then per clunk kind of move, starting at 8 o'clock in the morning, finishing in the 9 o'clock hour session. I haven't looked at the short term, but that'll tell you how long it was. We'll take a look how the intraday was. But throughout the daily or the movements after the event, it just hung in there really doing nothing. Not enough time for the 18 to catch up, albeit it will be close as we enter the action on Sunday night. And if this area doesn't hold, we'll be looking next at these lower areas like 1450. That's so short term. But to me, on a situation like this, if this is looking to break down, I'm going to be thinking 1321 is the extended target. But before we get there, I think around 14 low change, 1420, 1415 area would be the first area of support, even down to as low as 1406, 1407 ballpark area within this congestion range, and really a portion of the way from here to here, almost like a rest stop if you're taking a tour somewhere. And like halfway through, you go find a hotel, stuff like that. Another way of looking at it is it's a decent leg lower in this area from where we have been. So that's why I'd be looking for this general, which would be a 50% retracement area, to be that of support. On the 1 minute term, let's just see how fast this happened. Oh, that was just fast. 1 minute it happened on. Must have been some sort of news that happened at 8:30. Yada yada stuff. So 1 minute the price goes from like 1479 down to 1464, and then throughout the rest of the session down to like right at 10 o'clock here, just grinding its way lower as it originally established support at around 1465, broke down below, establishing again at 1461, again at 1460, and then again at 1459, and then finally in at 1458. So that was the fast move. Let's take a look at silver next, and we'll start off within the 1 minute time frame as well. And we can see in here, had its failed breakout on this move, just barely microscopically north of the 17 US fiat dollar number. And then it fell close to barely above the 16.5 number as we closed on the Friday session. And it started as well at 8:30. And unlike gold had all of its move at one time. Silver, not so much, at least in the early stages. It's for the first minute only went down to 1684. But then from about 906 all the way down to about 938. Decent sized decline going from 1690 down to 1653. And then from that point on throughout the day, obvious sideways reaction. Nothing much at all bullishly or bearishly for the rest of the day. Switching off to the 1 hour time frame, and these levels, this is odd. I mean, I really have to bring this up because, oh my goodness, I'll talk about always piercing extra when we make these moves. Not once did it even touch the 1740 level from this decline that occurred down in here. Now, if it were to say, do something like this, pull back, and then the second time it does this, well, that's normal. But it didn't even do that. Meaning these two tests, much, much, much lower. And very, very rare to see. Most times it pierces extra. This is one of the few times. Now, as far as how this looks on the hourly, we can see the range of support between 16 and 3/5 or 1661 and roughly 16 and 4/5 at 1680. Got through that level now. It's that level's not seen in, nothing in here. Like new levels since even before September the 9th. And when looking at this on the daily term, that means we're at levels not seen since this low here in middle of summer, middle of August. But this is a pretty clear statement. We got another 40 plus cents to go down, or 2.5% more. As the likelihood after seeing what has been coming in play. 1740 first support here, September 16th, and then it makes a lower high. And then it has a very large pierce below, failed breakdown, but not much of a fast move or concise move higher, only retesting a second and a third, or even really fourth time. This being the second time here, third here, and then here last on November 5th, or 4th, whatever day that was. But it hits it twice, and then no support on this mark. Again, not resisting this level. So, yeah, we're making a move, which would be a 61.8% down correction on an exponential Fibonacci level in regards to these May lows at about 14 and a quarter and these highs near 19 and 2/3. Yep, 19 and 2/3 was the price. Now it's 60 and a half, so it's dropped a little over $3. That's a little over 20%. And throughout the much more longer term analysis of such, let's take a look at the weekly chart. And we've seen a lot of the price action in this sideways move. We had support back in 2013, 2014, all that stuff at about $19. Now we can see we just resisted it, and we did it again because we resisted it back in 2016 and almost in 2017 and almost in 2018. Not really in the earlier parts of 2019, but the later parts here most certainly did. Where do we see it now within the 18? Well, after coming down to it at the start of the autumn solstice, northern hemisphere, it comes up to the 18 average of highs, and then the big size decline move on November the 4th. And so far, just a few days of going sideways, and now this is a bearish signal within this candle after this move in here. And a little bit of this rally higher, pretty much to the 18 average of close not shown, but also within this level of previous support. And falling down below here, be looking down towards this next key level. And really a 61.8% big correctionary move does seem as if that would be in order for the monthly term time frame. As I keep on talking about this attempt for reversal of trend, but I have for the last half decade. And until it stops, and as long as I keep on doing this, until it doesn't do anything, and as long as I'm doing these videos, I'll keep on doing it more. But you had this breakout attempt in here, which didn't really suffice any type of large breakdown. So a second attempt at doing so just now. And after this high, we've now managed to come up towards in here. We got this newly rising. Really, this is like your must-hold area for this move. If this comes down in here and it's successful in support, And then one of the next steps after that is exitation above the 18 average of highs. The setups look really good and bullish, and you would look back after the fact and say, yeah, that was a good setup, high or low. That's normal action in bull market reversals. It did what it was supposed to do and such. And that's why I would consider this to be the area of the must hold. Okay, let's finish this off within the quarterly term time frame. And this brings us back to the early 1980 highs for the market. So now we're going to have a 40-year anniversary, yada, yada, yada. What we're going to notice in January is you're going to see every television channel, at least every news channel, they're going to spend hours and hours and hours not talking about this January 1980 high. They're going to talk days and days and days just avoiding the fact that the price action before started off 1979 and, well, it was, let's just look, this is quarterly. So yeah, we started off around $6, $7. We ended the year in 79 at $29.05. So we're down 40 years. So, okay, whatever. That's just how the markets move. And then, of course, we have a high in here. It says 41.50, but no. This thing has an LBAM, a London Bullion Metals with the letter A, association. Now I think of Garth Brooks, Honky Tonk Bar Association when I say that, but throwing that part aside, I'm not going to sing. Oh man, I lost my train of thought because of that song I'm not a big fan of. But let me just pause the tape and try to remember it. Yeah, the LBMA association. I was trying to think. Yeah, association. Why did I want association? Anyway, they have fixings, as they called it, in at about $49 in high change. 49. I think it might have been 50-50. Either way, it's a $50 price. And then all of this stuff coming back down. Well, as we stand a retest of previous high, that occurred a long time ago now, 9 years ago. Well, at least it will be in a few months. 8.7 years ago now. And then all of this downward movements in here supporting this area of congestion from between 2006 and 2009. And now for the last half decade or so, it's just been riding within this 18 average. A little bit of an attempt to try to get this sideways band trying to go higher, but still a long ways to go. But when this thing gets going, you start to see it clearly, 22, 23, 24. That is a pure excitation in a bullish level of this 18 average band. And for me, precious metals, but more particularly that of silver, is, I feel, the most safest choice, at least for myself, for holding onto assets, investments for the long term. And even 2, 3, 4 years is a pretty long ways away based on situations like controlling your own money. Thus, of course, you hold the physical silver and gold, for that matter, is a good honorable mention for such in your possession, where you have very high probability as no one's going to steal it from you. And the probability of the aspects of holding your value and increasing your net value, I think, has got phenomenal risk-reward ratios, where things like cryptocurrencies can have most spectacular, can have great gains, easier to trade within the markets, and you can even turn your profits into gold and silver. And that makes that a very amazing vehicle for those types of things you might want to do. But there's no way I can say, yeah, 4 or 5 years from now, I am very confident holding, you name any cryptocurrency. I do not feel anywhere near 90-95% confident holding that 5 years from now. Whereas silver, I'm much, much greater than 99.9% really for its holding of the metal, and it's doing its job of at least holding its value at a decent rate, let alone its gains that I think are going to come in. And doing so, of course, would be on a break of this resistance of 50. That would be a major, major excitation bullish level if it's able to do something. People call stuff like that like a cup and handle formation, which is simply just a U-shaped formation, meaning you were at a high, you have a correction, you go back to previous high, you resist it, and then you have a very good high or low correction, and then you retest that level. And when you get to a situation up in here, that's a bullish setup. Thank you for tuning in and have yourself a great day. Bye-bye.